looking at charts that show this wealth inequality gap growing faster and faster and faster, bigger and bigger and bigger. I mean, is this the big wealth transfer that's happening right now?
Yeah, it's the people who own assets. You hear about the boomers have made out so well. They're living large. They're living these huge homes. They're worth so much money. And the reality is, the older demographic is typically the demographic that owns assets. And the ones who own assets have done well because you've had a massive amount of asset inflation as we continue to print money. And so that's it. That's the crux right there. If you don't own assets, then you're being left behind because your wages are not keeping up. And so you are falling behind in even being able to buy those assets. And so that's the greatest challenge for this next generation is how do you get some assets that you can hold for a long period of time that will outpace that expansion of the money supply, which leads us exactly to why we do what we do and why we're so focused on Bitcoin.
Yeah. So if you look at like that real rate of monetary debasement as being inflation, 10%, 12, 14%. And then you look at all the different asset classes. So then you go, okay, well, what asset classes do I have to invest in that could beat that? I just saw this video the other day of Ray Dalio talking about, well, the way that you want to build wealth is you want to invest across 15 different asset classes. This was just a couple days ago. So he's still pushing this all-weather portfolio. Problem is that all-weather portfolio doesn't make any money. They've had over $70 billion in redemptions in the last several years because it just doesn't make any money. And I think it goes back to, why would I invest through 15 different assets if none of those assets are keeping up with or beating the rate of monetary debasement? And so when you look at it from that type of a lens, which is sort of how I look from it, then you see that the only things that have beat it are tech stocks in the NASDAQ and Bitcoin. And that's it. So what we see is that different assets soak up that extra liquidity at different rates. And I think that's what separates the winners and losers. And it doesn't seem like factually in history, Bitcoin has soaked that up at the fastest rate. So why is that?
Yeah. I mean, obviously to you and me, Bitcoin it's sound money. It's hard money. It's something that cannot be debased. There's only going to be 21 million Bitcoin ever minted, ever created. And so it can't be manipulated like fiat money supplies. And even like gold, we've seen the madness out in London this last week, last few weeks, and what's happening there. And this is kind of an important thing because people think, oh yeah, but I buy gold, then I'm protected. But gold, I mean, if gold was not so manipulated, it would be at a much higher price. It would be, in the tens of thousands. It wouldn't be just hovering around 3. And so the issue there is that you have sovereigns buying gold. You have some worries about Trump tariffs and bringing your gold back into the States and having a sudden tariff on it. So you've got the COMEX is bringing gold back into New York and into the United States. And so you have players around the world that are buying gold, like the BRICS countries, to try to avoid having to buy U.S. treasuries in order to have dollars, because everybody still needs dollars around the world. But if you have gold, then you're supposedly protected. Well, the issue in the last few weeks out in London is that the Bank of England realized we don't have all the gold in our vaults. We can't just send it out. So it's going to take us 4 to 8 weeks to get you your gold. Okay, so then think about that. You've got 4 to 8 weeks before you can get your hard asset that is supposedly hard and being held in a vault for you. Okay, that's number one. Then you've got to transfer it. You've got to transport it, which you've got to put it on. You've got to put it on a truck and a plane or a boat or something on rail to get it to wherever you need it to be. And it's got to be protected. So you have to pay for security for it. It's very heavy stuff. And they even said it like, this is heavy. Yeah. The Bank of England was on stage at a press conference saying, well, it's really heavy, so it takes a while to move.
Yeah.
So if you want to move $1 billion of gold, think about all that would take to do that, to get it from London to New York. Then think about something like Bitcoin, where you have verifiable addresses and it's immutable. And you know that you look at that address and you see exactly how much Bitcoin is in that part of the blockchain, right? It's very easily auditable. You don't have to worry that it might be just gold-plated nickel. Like you saw in the JP Morgan vaults, they had $50 million of gold-plated nickel
Right.
by accident. They didn't know about. Well, you know that's not going to happen. You can move it. You can move $1 billion of Bitcoin in less than 10 minutes for a few bucks.
Right.
It's staggering, and people are starting to catch on to this. And so the younger generation is very comfortable with that digital asset, that concept. The older generation, not so much. They love the gold, typically. My mom loves Bitcoin, but you have the younger generation now is looking at things like digital assets, and Bitcoin is one of those digital assets that is starting to bring people over to a new asset class, and it's emerging and it's growing rapidly, and that's the point.
Do you see sort of like this bifurcation happen in the market where you mentioned like the older generation, the younger generation? I'm not sure if I see it that way, but I do see a bifurcation happening where you see massive demand for gold through central banks.
Mm-hmm.
Their demand for gold is at all-time highs the last couple of years. You mentioned BRICS nations, China trying to divest from treasuries, things like that. So you see the governments of the central banks sort of clamoring for the gold. But when you look at a little bit lower down, when you look at the institutions, even when you look at like government sovereign wealth funds and then down to institutions in Wall Street, it seems they're more into buying Bitcoin right now. So I see announcements almost every day of new publicly traded companies adding Bitcoin to their balance sheet.
Mm-hmm.
I haven't heard of any that are adding gold to their balance sheet. We hear about sovereign wealth funds. I think just today, was it Saudi Arabia or was it Abu Dhabi announced they had $460 million worth of Bitcoin added, but you didn't hear about them adding gold. So it's almost like this bifurcation where the governments and central banks seem to be acquiring gold at a rapid rate, but then everyone just below that, sovereign wealth down to institutions and banks, are going into Bitcoin. Is that what you're seeing?
Yeah. I mean, that's fair. Exactly. And just going back to what we're talking about, that the inflation, keep up inflation and demographics, that's one side of it. But what you just hit on is that it's probably this is the key development for Bitcoin in this last 18 months. You've had massive tailwinds for this asset class, mm-hmm. and we can talk through each of those. But just like you said, you have these sovereign wealth funds, institutions, very large, high net worth individuals coming into this new asset class because they know that and this is all game theory now, is that I need to get some of this before the price gets away from me. And then people look at it and say, oh God, it's $100,000. It's too late. I can't afford a Bitcoin now. Where it is, you and I know that that's just a number. Like the debasement's not going to stop. This is going to continue to go up in value, meaning the dollar is going to go down in value against it. So they're not sensitive to price like retail is. Like, some of the smaller players are who only have so much money. They're very sensitive to the price of Bitcoin. Whereas you have Abu Dhabi come in, they could buy $500 million of Bitcoin,
and they did,
just go along in the market. Like I'm not price sensitive. I'm not waiting for it to get back to 70.
Yeah,
just participate and go along in the market, and that's what they did. And what's interesting about that is they bought the ETFs. Apparently, from the report, they bought ETFs. And so people would now say, wow, but that's just paper Bitcoin. It's not. The ETFs have a legal obligation to own the underlying Bitcoin. If you're a spot ETF like IBIT or like, FBTC or Bitwise, you have to own those, the corresponding amount of Bitcoin to the NAV. Okay. So, but that is an easy way for any player to get in. Sovereign funds, governments, institutions, endowments, pension funds, they can just buy the ETF now. That's a super highway that's been built.
Yeah.
It's so easy for them to get on that. So institutional adoption is happening. It's happening quietly. You do see companies coming in and buying Bitcoin. You do hear about companies buying actual Bitcoin on their treasuries. But this is kind of like, it's all now forming and taking shape in exactly what you just said. It's becoming adopted as a new asset class.
Yeah. Right before our eyes. You You mentioned earlier, like sort of like the Bank of England and the LBMA, London Bullion Market, and as well as the BOE, Bank of England, both running out of gold. The world's clamoring for gold, trying to get it from wherever they can. I think the LBMA had 320 million ounces on paper, but like 400 ounces of claims against that, but only 30 available or something like that. It was crazy. But what we're seeing now, everyone's clamoring for gold. We're starting to see that a lot of these ETFs have leased out their gold. Right, so that's like that rehypothecation.
Exactly.
So when you talk about like the Bitcoin fund, they're legally required to buy it, but are they allowed to? Are they restricted from leasing it out and rehypothecating it like we see in the gold market?
Well, they're not supposed to be rehypothecating the Bitcoin. So gold, yeah, I mean they have ways to do that clearly, and that has been the problem. That's been the fear of people who own these ETFs. Do they actually have the gold in the vaults like they say they do? And it's hard to audit that. But again, with Bitcoin, you can audit it in minutes. You can just have your spreadsheets and audit it. It's not. It won't be difficult.